Hi, everybody. Hi. Welcome. Welcome to another panel here on the Social Innovation Summit 2021. The panel that's about to begin is titled Impact Investing and the Future of Finance. Briefly, my name is Louisa Bojesen. I'm going to be your moderator for the next hour. I was with CNBC International for almost 20 years, anchoring shows there. Anything that moves the markets, covering all kinds of finance angles, great financial crisis, all kinds of other market moves through the past 2 decades, and interviewing all the great and the good, all kinds of global leaders, CEOs, industry experts, you name it. So I am thrilled to be here, as this has also been one of the areas I've been looking at over the past 20 years or so. So let's get to the panel. And what I'd like to do is to ask everybody on this panel to introduce yourselves. Tell us who you are, what you do, your company, and why not also just throw in something exciting that you're working on at the moment. And let's start with you, Bart. Take it away.
Thank you very much, Louisa, for the introduction. I'm delighted to be here today. I'm Bart Turtleboom. I'm the chairman of Delphos International, an advisory firm in Washington, D.C. that channels official sources of financing into projects, funds, corporations in emerging markets. We've done it for over 33 years, been a very successful business. And the big project we're currently working on right now is launching a global impact bank. We have a solid, strong advisory business. We have a strong research business, and we're now turning it into a proper merchant bank and putting it into a banking holding company based in Europe.
All right. Sandra, a couple of words from you, please.
Sure. I am Sandy Moore. It's what everyone calls me. I am a partner and chief impact officer at Advantage Capital. We are an impact growth investing firm. We've been around 30 years. We drive capital to places that it does not ordinarily go. And as such, we've been doing impact investing, if you will, long before it became such a popular term. We've got about $3 billion and assets under management at any given moment, invested in about 220 firms in some of the toughest and most challenged urban and rural areas in this country. What we are working on right now that's really very exciting to me is that we are redoubling our efforts to break up disparity in investment strategy and investment outcomes. We really are very focused on that. So to that end, we're using all the tools that are available, anything from the government, from SSBCI to new market tax credits, all the interest that's in the private market. Everyone says they want to do better by investing and eliminating disparity. And we've really honed in on, okay, let's see how we can take what we know how to do and make that work.
Okay. Justin, and you just need to unmute. Yeah, there you go.
Great. Yeah, thanks. Thank you very much, Louisa, and good afternoon, everyone. My name is Justin Stevens. I'm a senior partner at Apollo. I've been there for about the past 17 years. During my tenure at Apollo, I've spent my time on a combination of investing and business building. And for the past 2 years, I've had the privilege of focusing primarily on the enhancement of our cross-platform sustainability activities. Apollo has a strong tradition of responsible investing. We have an ESG practice that's over a decade old and actually led Newsweek to name us one of America's most responsible companies in 2020. Over time, we've continued to grow and evolve those sustainable investing efforts, including through the establishment of an impact investing platform, which we launched last year and is focused on investing in assets whose business models have a co-linear relationship with positively impacting the world. We've also created an impact advisory committee, which is chaired by my colleague, Lisa Hall, and includes accomplished luminaries across a variety of fields whose experience spans our areas of focus. In addition, the firm has a number of exciting initiatives ongoing across diversity and inclusion, focused on expanding opportunity to a wide, diverse set of professionals and firms. And we're also in the process of building out our citizenship activities and ensuring that we maximize the skill sets and enthusiasm of our employee base in the process. So as you can hear, even from this summary, there's a lot going on at the firm. Personally, I'm also a formal advisor to Impact America Fund, which is a early stage venture capital fund focused on, underrepresented lower to middle income communities of color, which is a advisory job that I enjoy a lot.
Sure. I just feel before we go on that we got a little bit more meat from you, Sandy, and from Justin than from you, Bart. So if you wouldn't mind, Bart, just tell us a little bit more about the bank that you're structuring at the moment, and what the point is of this and how it's going to differ from what we've seen so far.
When you look at impact investing in emerging markets, what you often see is that there are official initiatives that are focused on certain sectors, healthcare in Kenya or solar energy in Ecuador. And the problem with a lot of these approaches is that they end up with subscale efforts that get launched with great fanfare, but then end up dying on the vine slowly over the next 3 to 5 years. What we're aiming to do is become the go-to place in emerging markets for any sort of mezzanine impact financing that is available. It serves a beautiful purpose to fill that missing link, because on the private equity side, there are deep pools of capital available. On the senior debt side, obviously, from official instances, there are lots of initiatives available. But that missing link in the middle is something we are going to focus on, which is really catalytic capital to really unlock what we believe to be a worthwhile project from a development perspective, but be also an area where we see very significant returns.
Okay. I just wanted to make sure to get kind of almost an equal bit from all of you, because I do think it's an interesting panel from a perspective that we have you, Bart, with a kind of a quite straight banking background, and Justin, you have this almost 20 years of private equity background, and Sandy, you have a very diverse background dealing with both urbanization, dealing with projects on the ground, dealing with also you were a judge that had to do with employment discrimination, I know. So you come from a different angle also. So I think it's interesting to hear kind of, you know, how we put it all together. And having said that, how do each of you think that impact investing has changed over these past recent years? Sandy, let's kick it off with you.
Well, I think the biggest change is a bit of a dichotomy, but I will describe it this way. There's been enormous focus, while at the same time, deeper specificity. And by that, I mean, there was a point at which impact investing was anything that you wanted to put your money in, maybe take a moderated return and do the good that you felt you wanted to do when you called that impact investing. And that was the big, broad world. Very, you know, it was as innovative and open as what, you know, how you wear your hair. We are now arriving at a place that I think is absolutely perfect, where there's a lot more specificity and focus. And that's not harmful. Sometimes specificity can be limiting, but I would argue that in the impact investing space, specificity is defining, because now people know what we are talking about. We're talking about putting money to work with reasonable returns, maybe moderated returns in many instances, for a set of outcomes that we all clearly define and expect to be defined. There's still a great deal of specificity. Here at Advantage, our impact that we are seeking is job growth, high wage, high benefit job growth through investing in operating businesses. But that's the kind of specificity that I've seen emerge over the last 10 years that I think indicates focus, and I think that's really been important.
Justin, you were nodding through a lot of that.
Yeah, because I think Sandra really hit on some key important points. I think, you know, obviously the market has gotten much more popular in recent years, and so that's kind of brought this flood of capital. But this concept of differentiation and specialization, I think, is an important one, and that, phraseology is still a little bit amorphous. I think the word impact means different things to different people, but we are starting to converge on certain rubrics or methodologies or philosophies that kind of the market is embracing. I know at Apollo, as we've kind of embraced the impact, we've tried to use those open source methodologies and rubrics to kind of reinforce that same language so we can measure things against each other and really have that. And, specificity is really important too, because I think most people, who aren't in finance think about debt and equity as kind of, or even just capital, right? But I think as we all know, there's many different forms and many different levels of complexity and risk and the type of money that people have. And different money has different mandates from different stakeholders. And, the more this ecosystem builds out, the more you're able to have that discussion of, where is your capital best used, right? Apollo is always big. We're a large financial institution and we love complexity, and we like to, use complexity to find value and structure things. So we look for big complex-ish, situations to help with impact. Other institutions have outstanding experience, in certain regions or place-based strategies, and it makes sense for them to focus on those. Or, others will have an industry expertise that they've really kind of, and that's all great, right? Those are signs of maturation, and those are signs that we're kind of headed in the right direction.
Bart, complexity, simplicity, how have things changed from your end?
No, I think both Justin and Sandy hit on two incredibly important points, right? From our side, we're going to focus on infrastructure and energy transition. And the reason we're focusing on those two things is because we want to go for a scalable effort in impact. And to Justin's point, if I just may elaborate here with an anecdote, a very large long-only asset manager recently looked at how many impact metrics they were using internally in all their different pools of capital, and they came up with 1,300. And the good man was in charge of narrowing that down and declared victory when he got to 130. So you're absolutely right, Justin. I mean, it means all sorts of things to all sorts of people. The reason we want to focus on infrastructure and renewable energy, climate and energy transition is those are the markets where you can go for scale. There is only so much money, and it becomes much more philanthropic that you can deploy in primary schools in Kenya. And these are expensive efforts. So what we are trying to do is bring it out, stick to a set of well-established metrics, go through a process where both on the liability side, all the way to the investee company, there is clear reporting on what our impact policy means and how the metrics work. Run it through and build a scalable effort. That's what we're all about.
You mentioned the philanthropic angle, Bart. Do you think impact investing is primarily philanthropic, or are we moving more towards it being financial with a social scope, or is it somewhere in between? How are we supposed to approach it, and also compared to, say, SRI?
I want to pick up on that question and what Sandy just said, right? I mean, there's clearly an element here which is absolutely totally non-financial, which is about enhancement opportunities, whether it's highway jobs, whether it's disadvantage to communities, those type of things. And those are exceptionally valuable. And the government initiatives that we're seeing around the world, I think, are also valuable in that. How they often get implemented is a bit of a different story. And that's where certainly firms also like Advantage have an enormous contribution that they're doing in their current business. But I would argue for it to be a long-term important trend, there has to be an underlying financial viability to what is being done. And we've seen now over the past, over the past couple of months, we saw what's happening on the Exxon board. This is now becoming ingrained in the corporate culture and the corporate governance of large institutions. And my suspicion is that the minute the rating agencies start incorporating impact or ESG metrics in their assessment of their ratings, the world will dramatically change, because that's going to Justin's point, have a direct impact on their cost of capital, and then they have to take it serious.
And Louisa, let me get in here, because you were so kind and generous to point out my huge, long, largely government or not-for-profit background and service, both as a lawyer, as an administrative judge, and the last company that I led, and so forth and so on, which was a large not-for-profit. In all of that work, the through thread is that I was looking for the opportunity to change things that I thought important to make the world a better place. Don't send me any flowers. It's just the way that I'm built, okay? And after a long career, every gray hair is real, a long career, I came to understand this one thing that Bart has hit on, and Justin, I'm sure, is going to nod in agreement. If philanthropy were going to solve the things that we are attacking with impact investing, it would have happened already. The problems would be solved.
Exactly.
With this is a capitalistic country. And I came to this work from largely a public service and not-for-profit world. And I came to it recognizing that I needed private capital to drive the outcomes that I really wanted to see achieved. And private capital expects a return on its investment. Now, we are all here because we are very passionate that the return have some balance between finance and social impact, but there's gotta be financial return. The market dictates that we will get the changes that we seek in huge swatches, from climate to education to
Justin.
wages,
Yeah, I completely agree with those takeaways. And I think so much of what impact investing is trying to do is take the incredible driving force that capitalism is and inject sustainable elements that are good for the world and fold that into the DNA of the way that business people and financiers and everything think. I think what's so interesting to me, a lot of this is really about muscle memory and building a path, right? And that it's amazing that up till 5-10 years ago, obviously there was a lot of activity in the impact world, but the great majority of the financial world people had two things, right? There was pure economic driven return investing, and there was pure give it away philanthropy, right? And those are the only two. There was no overlap. There was no meat whatsoever. And I think, one of the things that impact investing does is say, well, you can have pure returns and still be sustainable. But I think so it's added another dimension, but it's also filling out this whole middle, right? And I think the high net worth family offices have led the way, probably because they have a smaller group of stakeholders of saying, look, maybe there's a middle, right? Maybe there's some things where it's fine to just get my capital back, or it's okay to get capital in a little return, or capital minus. And what's amazing is as we built all these different structures out and create new opportunities, there are certain causes that are best cater to a capital return or a below market rate or a market rate, or the whole spectrum gets filled out. And I think so much of what's happening now is that that wonky discussion, for lack of a better word, which I think is very healthy for the whole ecosystem.
So if I'm reading you right, it's kind of down the road of investors. They don't have to put up with crappy returns any longer. Basically, that it's a real industry now where there's both a give and a take at the same time.
That is right.
Yeah. Bart, when looking at again a global impact bank, and Sandy hit a little bit on it with regards to the metrics, like do we need kind of a unification across the board of how we measure success in this area? Like, do metrics need to change, or do we need to speak from the same, hymn sheet, basically?
I don't think we need to sing exactly from the same hymn sheet, but we do need some broad metrics on which there is some reasonable agreement among various market players. I mean, it is impossible, coming back to the board of Exxon, it's impossible for the board of Exxon to be held to a standard of energy transition when there are 75 standards being presented to them by 35 people. I mean, that's just not going to work. I mean, we need to have some order to the madness. I mean, so I think we need some sort of standard, and we're also going to need standards for two reasons. Another reason, the corollary of the huge amounts of flows going into impact investing is also that capital gets misallocated. And there is a potential risk here, which we are seeing of, it's not the issue in the US of greenwashing, right? I mean, you sort of put something and say, okay, you know what, I go and buy 2 wind farms, then I have 10 oil and gas fields in Uzbekistan, and all of a sudden I'm a sort of a renewable energy player. Well, that's not going to work. So we need to narrow down the metrics, agree to a broad set that makes half sense, and that is implementable. And I think that, to me, is going to be the big innovation of this year and next year. I mean, everybody knows impact is important. Everybody knows energy transition is important. We know all these type of things. But this time is the time where we're going to put meat on the bone and really implement it across the board in the corporate sector, including the corporate culture. Let's not forget that little bit.
Yeah.
That really leads to desirable outcomes.
Okay. Justin, opportunities in particular areas at the moment. Where do you think that investors should be looking?
That's an excellent question. I think we see kind of, opportunities in a lot of different places. I think what's interesting is that, like all kind of fields of investing, there's different sub industries within impact that kind of have their moment of the sun, right? And I think, as we, climate tech is obviously very, forefront now. A lot of that is because the technology cost has finally come to a place where the economic returns are viable, and people can put money to work in, very compelling ways. So I think that's already, very widely known, right, as an example of something that's kind of, probably really cresting right now in the mindset. When kind of we think of what's around the corner, we like to say we have a foggy crystal ball. We're never, good at that. But, I hear a lot of talk about biodiversity starting to share the stage with climate tech on, carbon on the kind of climate side. So I think you might see some of that sort of thing. But I think those questions are somewhat related to early stage investors. I think at Apollo, our impact approach has tried to be multi-industry so that we don't have to invest into the industries that are, where investor, perception may be higher than reality. We'd rather do the reverse, right? And so having kind of a variety of different industries or geographies or verticals allows you to have that flexibility, because I think a lot of investors are just making their way into impact now, and we want to be able to find the best for those investors in any way we can.
Sandy, trends and opportunities?
Well, I think that Justin is right on it. I think the trend really is not being quite as pigeonholed as we have been in the past around what we will invest in and call it impact. And I do want to point out, Bart, that we've seen some greenwashing in the United States. Just to be clear. So I think that I'm with Justin on where the trends are. The trends are looking at investing across multiple platforms, and that really is new as opposed to where we have been around water or wind or solar. We're seeing that there are more opportunities in a variety of ways. And there's one other thing that I wanted to just jump in on, steps back to something that Bart was talking about a minute ago. And it's semantics, but I think it's important. I think we are at a point now where we're setting broad standards, and it does tie to this answer, Louisa. We're setting, the metrics will be what the metrics are, how we want to count, but we're setting broad standards around what we're going to call impact investing, what we're going to call reasonable returns, what we're going to call reasonable methodologies. And I think that is important, and metrics will fall in line with that. So 2 answers to 1 question.
Sure. Well, the more the merrier. Bart, you mentioned initially, you said infrastructure was kind of one of the big areas that you're focusing on. Any other areas of opportunity that you think really are going to kind of steal the limelight these next couple of years?
Infrastructure obviously touches on a huge number of sectors, right? It deals from a solar energy project that we're currently working on in Afghanistan to a highway sensor system in Indonesia, which is going to deal with urban mobility. So I mean, there's an infrastructure element to all of these things, and it gives a significant scale to the effort that we're bringing to bear on it. So that's why we're focusing on these two angles. There are, I mean, obviously more bespoke opportunities here and there, but I think leaving those to very specific sector specialists is going to be a bit of a better opportunity. I will mention one thing though, picking up on what Sandy just said. There is one set of institutions, Sandy, that still needs to set a standards for itself, and it's central banks. How are central banks going to incorporate this impact investing approach in their monetary policy, in the way they set interest rates, in the way they deploy their balance sheet, which is huge? I mean, let's not forget, central bank balance sheets have grown from what? I forgot the exact numbers, 5 trillion 15 years ago to like 15 trillion right now. So monstrous amounts, right? So it's an important aspect because, again, it's going to have an enormous signaling impact on how not just the investor community, but at the end of the day, the business community is going to perceive how it should apply what standards, when, and where.
Sandy?
I agree. I mean, that is a big, huge, fat nut to crack. But like anything, once you set the standard, then you set the frame. And once you set the frame, then we can fill in the picture. And that's why I wanted to step back and talk about that standard setting. And I think we're making great progress. But I'm not going to make any predictions on when and where and how the central bank's going to answer the question or answer the call.
But I do think the whole issue of how do you measure success, along those lines of taking, you say setting standards, how do you measure success in impact investing where, it's not SRI, where it's about, CO2 reductions or like I do find it interesting, like, and especially when you're dealing with the actual investing on the ground, like how do you, and making a difference also in communities, like I find that interesting.
It is the love. It's the part of the work that I love. And I'm going to tell you, we keep it simple at Advantage. We've got a big portfolio, but we know, and one of the things that I've really brought to the table for my partners is we know what changes from the ground up when you invest in a business. You invest in a business and give it the opportunity to grow, unsaddle it from an extraordinarily high cost of capital in distressed communities, unsaddle it from the lack of management experience because it's in rural America and just hasn't had the talent. You unsaddle it from that. You couple it with money put together in the right way, the money that business needs at that time. Advantage goes up and down the capital stack. We go anywhere in the capital stack based on, you've got a price according to risk, of course, but we go anywhere in the capital stack. You do that, and we know instinctively what happens. The business grows, the business creates more jobs, the jobs generate more income, the income can be tracked to what I pay attention to, real change at the household level all the way up the chain. So that's the through thread for us is, what can we actually measure that changes at the business, at the household, and at the regional level?
People are writing in with questions, and by all means, if you're watching out there, get involved. We want to get you guys in on this, because otherwise we're just, 3 talking heads really, and a half a talking head for me. But it's the more the merrier in terms of your questions. So let me just grab some of these questions from an end and just throw them out there. A question for Justin: is there a trend for people to start to invest in creative industry, i.e., social impact media? Justin.
Wow.
It's an excellent question. I think we're very excited about the potential for the creative economy, especially for underrepresented groups, which especially in the U.S. have historically been, kind of a disproportionate share of the creators in certain ways, but have not received their requisite share of the profits. And so that is a topic that we're actively focused and excited about. There's a number of groups out there doing great work on the ground. I'm going to give a plug to one of my favorite, Tiffany Latrice and Tila Studios. in Atlanta, who's doing a lot of great work around diverse creatives and trying to, give them opportunities. They're doing a bunch of work with us, and we're looking at some exciting collaborations. I think this is definitely an area because I think it taps on certain human elements of, impact itself taps on a very human element of wanting to help other people, which is a beautiful thing. And creative, whether it's music, whether it's art, whether it's performance, is another great human element and a way to tap that emotion as well. And so any chance we have to kind of, bring those together, is really powerful. And so, yeah, it's a place that we spend a surprising amount of time for outsiders, because we do feel that there's some passionate stuff to do there.
Eric writes in and says, essentially, he's talking about whether it's in monetary policy, Bart, and I'm going to direct this at you, because I know that I was looking at your background and you looked at interest rate liberalization in Africa at one point in your career, as well as the tax collection and monetary policies in Brazil. So you get the interest rate question, Bart, but it's in monetary policy in full employment, as well as price stability. Isn't it the difference between the ECB and the Fed with a public benefit in each policy? I think there might be a few words missing, but essentially the difference between the ECB and the Fed with a public benefit in each policy, along with monetary policy thrown in. How do you view, I guess, the central bank roles? Well, we know what central banks do with all this, the quantitative easing, right? Are we seeing elements of that translated through into impact investing, Bart?
I think the central banks are probably the institutions that really still truly need to figure out what all of this means, because that you've just mentioned, different central banks have different objectives: full employment and price stability being defined as 2% inflation, all sorts of things, the ECB, this and that. Nowhere in their mandates is the word impact mentioned. Right? It's just, I mean, this is not something that I was the first foreign national intern at the Board of Governors of the Federal Reserve in the 1990s. I don't think that to this date they have an impact division. And so, I mean, it's very new for them, but it does have an important aspect of it. Climate transition and moving away from oil and gas into renewable energy could potentially be quite inflationary. And central banks obviously have been struggling to generate any inflation. Whether it's going to be the right kind of inflation that they're generating is kind of a bit of a different story. But we are going to have transitional dynamics here. As Igor Sechin pointed out in St. Petersburg, he's the CEO of Rosneft in Russia. He pointed out, he says, listen, this is all very good and well, you guys with your renewable energy, but it's going to take a bit of time to get there. And in the meantime, the price of oil could go over 100. So, just be prepared for it all. So I think the central banks have their work cut out here. It's going to be very difficult.
Sandy, let me give you a question here. Mike says, easily the best session so far. Thank you very much, Mike. Makes my job easy when I've got three amazing people here on the panel. Super honest and unscripted. Again, we love your thoughts. Bright panel members don't need to be scripted, right? Where do you see the hundreds of millions in startup angel investing resulting in billions of capital and jobs, think Uber, in this impact conversation? So where do you see the hundreds of millions in startup or angel investing? Or is it not on par with the typical enterprise structure?
Let me answer the first question, and I think it bleeds into the second. First of all, if we look, our history is a great predictor of our future, right? And our reality is that small businesses, really small businesses, are the engines of our economy, our jobs economy, all right? So when you couple that with the potential for angel investing and really growing, starting early and growing businesses, I think there's huge opportunity there. The challenge, of course, is that is the riskiest end of the investing spectrum, right? So we've all going to have to, if we want the opportunity of the job creation the innovation in what kinds of jobs, the innovation in the way that people work, the innovation in the way that the economy can grow, we're going to have to pull up our socks a bit and be willing to step into that risk. So I do think there is opportunity, but I think the system is inherently in opposite. The investing system is inherently in the big middle part of the system, inherently adverse to the growth in that sector that there is great potential for. So is the potential there? Yes. Historically, is that where we've seen the highest opportunity for job growth? Yes. Will we now, with impact investing, helping us to think differently, be willing to plunge in and take the risk? I don't know. There's some promising signs. I mean, what I see, and I hope it holds, with interest in investing in minority startups and minority founders, gives me a little hope that, okay, we're really now going to get serious about digging in and taking risk in new places.
Okay. Justin or Bart, do you want to comment on this question too, or shall I move on to another question?
Yeah,
No,
oh, sorry, go ahead, Bart.
No, you go, Justin.
So I agree. I think that I think once again, there's so much enthusiasm in early stage investing, which is great. And I think making sure that goes into differentiated impact focused pockets is equally as important. I mentioned early on my advisorship at Impact America Fund. I think they do an outstanding job of saying, how can we use early stage entrepreneurship and investing to generate generational wealth in lower to middle income communities of color, right? And so certain companies in their portfolio, like Maven, which has said, let's take there's a product that's sold in lower to middle income communities primarily, hair extensions. Let's take that supply chain and have the ultimate users of that supply chain own it in a much broader way. And let's capture that value into the communities that need to do it. I think that sort of creativity and thought is an excellent example. They have another portfolio company that looks at upscaling, home nursing, and how do we get people who are doing that? How do we skill them into jobs, deal with the bureaucracy that would otherwise get in the way? So, I think technology can be a huge differentiator for people in terms of skill and education and job potential, but it needs careful stewards who are focused on that, who want to make it happen, because technology left alone, it doesn't have a moral compass. It goes good or bad depending on who's controlling it.
Okay, I was listening. I was just looking something up with regards to one of the questions. Susan asks, why has the health sector not been mentioned? She then goes on to say the health sector was the health sector that one of you alluded to. But why is there not more mention of the health sector?
I can take a stab at this. I think the health sector is incredibly important. I think the one thing I'll note is that it's in certain ways somewhat differentiated from the rest of the sector in terms of the vocabulary it uses, the expertise required, especially when you get to things like life sciences and pharmaceuticals, that it somewhat has a little bit of a specialization silo around it, which doesn't mean that it's not important. It just means that people tend to specialize in healthcare, and you don't have many generalists kind of dabbling in healthcare on the side. That's at least my best view of it, but I don't know if Bart or Sandra have a different view.
No, I think that's right. And this is not my area of expertise, so I don't want to go too far down the road, but I think that's right. If I look into our portfolio, we've taken a leap into health care in the sense that we've gone into rapid clinics. We've gone into urgent care clinics, and we've gone into it from an impact platform, and that we are investing in a company that opens urgent care clinics in ethnic neighborhoods and makes certain that they are culturally competent and culturally specific to the neighborhood, and probably invested in the first group of those clinics that catered almost exclusively to Medicaid patients in the boroughs in New York. So that doesn't make us wide, but it does make us deep in our commitment there. And I think that Justin is right. It took us a while to put together the expertise to be able to to go there, and great leaps of faith. It's turned out to be wonderful. As a matter of fact, in the clinics that we invested in New York, they were early providers of the vaccine in communities that were largely being really starved on vaccines. So just a story there to talk about. There are innovative things happening in the space, but I think Justin hit it, that it's a very specialized area.
Udo says, thank you for answering the question, Justin, on the creative industries. So excited to hear that the creative industry starts to get the attention. Would love to hear more about it if possible. Frank writes in and says, how are you involving policymakers in regards to impact investments? And what's the underlying financial viability in regions like Africa? Bart, since you're the emerging markets man here, among other things, is this one that you want to take a go at?
Yeah. I mean, in emerging markets, policymakers have been extremely heavily involved in the debate, and to a large extent were the drivers of it. I mean, if you look at the Gates Foundation, what they've been doing in Africa, what they've been doing in emerging markets, the Rockefeller Foundation, the Ford Foundation, the Wellcome Trust in the UK, you're looking at institutions that have had an enormous impact. They might not be calling it impact, but they've certainly had an enormous impact on the lives and the well-being of people in emerging markets. However, it is now going to the next stage in terms of the overall guidance. And coming back to the point that Sandy made earlier, the standards that they are going to have to apply to how they're going to deploy their capital in the space. And if I may just pick up on what Sandy said earlier, if I need $500 million for a dam in Kenya, I'll probably get 2 billion allocated to it from a bunch of people. If I need 2 million to start a venture effort for pharmacies dedicated at women's health in Nigeria, I am going to have an almighty struggle.
Yes.
That is where the missing link is.
Right.
Financing the dam is easy. Doing the simple stuff at the start is unbelievably hard.
That's right. That's right.
No, it's a very good point. It's a very good point that you make, Bart. Sorry, I'm also at the same time, I'm looking, Dominic Ramos-Ruz says he's with the Federal Reserve Bank of New York, as you are. He writes in and says, our community development team is working on this right now. I'm not sure what you're referring to from one of the past questions, but I'm assuming it had to do with, we were talking about the central banks and how that mirrors what's taking place in impact. But Dominic, if you want, write in and let us know exactly the point that you're working on right now. Looking through more questions. Keep them coming through, your questions. It's great to have you all involved, and this is your time to ask these lovely panelists the questions that you might have. While you've been talking, I'm also thinking, we've talked about opportunities and we've talked about areas of interest. You mentioned one of the challenges, Bart, there with regards to how the detail of what it is that you're looking to raise money for really matters, and where it might be difficult to fundraise. Where are some of the other challenges in the industry that you think, you know, we should be focusing on or dealing with more? Justin.
Oh, was that for Bart or me?
Everybody. But we talked about opportunities, but we need to talk about challenges too, you know, and I'm assuming it's not just fundraising, it's also timing and investor platforms and things like that. I mean, are you seeing areas where you think, there's a bottleneck here and it's been going on for some time and this is really something that we need to move through?
Yeah, there's certain, I guess, I think people like this term valley of deaths and, different kind of funding models where things fall off. And I've heard that term applied to probably a dozen different models. I think one place where I see it is, on emerging tech, you were talking a little about venture before, and Bart, referenced how important the early things are. And I think that one of the issues you have in terms of creating really, future breaking tech that isn't software based, that has a third dimension in the world, that has hardware or life sciences or otherwise, is that some of these things cost a lot of money to fund when you get past that initial proof of concept. And the venture capital funding model has largely shifted over the past 10 to 20 years, where, it's all institutional funds. They need to return, there's going to be 50% of the deals are going to be zero and 30% are going to be modest returns. So you need those 1 or 2 deals that are going to return the fund. And every deal you're looking if it could be a 30x, 40x deal. And that's become the rubric through which you examine new deals. The issue there is certain things scale up incredibly well, like pure software. You write the code once, you tweak it, modify it, bring a sales team in, but essentially you get to sell that same piece an infinite amount of times. When you get into the real world, from a tangible standpoint, products that need to be manufactured or cultivated or otherwise, they don't scale that well. You have working capital issues, you need inventory, all these sorts of things. And the funding necessarily isn't there. So people don't even bother starting those companies, or VCs don't bother funding them in the early stage. And so I feel like there's some money and there's some earnest people who want to kind of, help create the technologies of the future. But the big, technological, tangible world breakthroughs are still coming out of the government and massive company research, budgets, because the early stage market isn't as aggressively going after that as one would hope. And so, I don't know what the answer to that model is yet, but, Sandra was talking earlier and we were talking about how the market is really specializing and converging. My hope is that more people will be attracted to, those types of opportunities and figure out, hey, I want to fund early stage technology to create the future in a better way. Like, how do I go about doing that? Even with the understanding that it's going to be harder to replicate the returns of certain things that are easier. And it's another flavor of catalytic capital, right?
Sandy, challenges.
I'm going to build on Justin's point with a lot more directness in one aspect. The challenge is you can't always have the high returns and get the good social impact. You just can't. And in doing some fundraising as part of our team, there comes a point at which there has to be a decision as to what you're willing to compromise on return in order to get the other part of the outcome. And that is really a challenge, because there is no, it's highly individualized from the investor perspective, an institutional investor, a high net worth individual. It's there's no rubric to decide, if you slide the pendulum this way, you should expect to get that. And if you slide it that way, you should expect to get this. So this is really a challenge, getting in and really understanding how much are you willing to compromise on hard return to get what? And what do I need to demonstrate for you as the Chief Impact Officer that you will accept and monetize? It's a challenge.
Sure. Bart, challenges.
From my perspective, I think the biggest challenge might actually have nothing to do with impact, but might have something to do with that we are currently at 0 interest rates in the G7.
Oh my.
And if the 10-year bond in the US government bond were to all of a sudden start yielding 5% again, which I'm not saying it will, but if we were to have a pickup in those things, I think then there is going to be a real cost of capital. And then we will see where the believers are. And that, I think, is going to make the point that Sandy just made even more important. Because as Justin just said, the venture model of I invest in things and I have the one on which I'm going to do a 40x, it's one thing to buy lottery tickets when money is free. It's another thing to buy them when money is not free.
I think you make an excellent point, Bart. I mean, it's crazy that we're so used to these 0% interest rates forever and ever and ever and ever and ever, when we actually all remember it was only yesterday that they were at 5% plus, right? I mean, it's amazing how quickly the world has changed and will continue to change. I'm aware of time. I'm also aware of questions that still are coming through. I want to quickly get to just an example from each of you where you actually have seen kind of a real live, on the ground type impact from what you do? Bart, let's start with you.
We're working on a social housing project in South Africa, and I think it's an actual beautiful effort. It's big. It's a multi-billion-dollar effort, and it combines concessional, i.e. non-dilutive capital to get the show on the road. It combines some infrastructure funding, both on the debt and on the equity side. And it combines a local currency component to deal with the currency risk that is embedded in these type of things. And it's obviously embedded in an overall government policy geared towards improving social housing in South Africa. It's scalable, there are meaningful returns, and it most certainly serves an absolute wonderful good.
Sandy.
No, we did a deal, small by comparison in terms of dollars to what Bart just talked about, but huge. We put modest amount, single digit millions investment in a company called North End Teleservices, an outsourced call center in Omaha, Nebraska, Northeast quadrant. Highly distressed area, very, very distressed area. And in an industry that people, call center was now the proper terminology is contact center. That investment has increased jobs in that area of the city 1,000% since we made that investment. For up 425 jobs in a community of where available workers is just a couple thousand. And really reset the model on what it means to take a business seated in a distressed community and grow it. Minority entrepreneur woman, Black woman, and she's taken it upon herself then, because we were able to get her capital at a cost in a format that she could use and she could grow. She's taken it upon herself to nurture other tiny entrepreneurs that are budding around her business. So we really seeded with that investment a node of vitality in a hugely distressed area, and it's completely replicable. The governor now says, can you do this in the next distressed quadrant of the region?
Sure. Justin.
Yeah, sure. Going back to this concept at Apollo, we think about impact at scale, right? Given our desire for large, complex deals. And I think maybe to provide another view of impact, as well. And also, I guess, to touch on healthcare a little bit as the audience would like. So we actually own a company called LifePoint Health, which is a very large owner of hospitals, primarily in rural and exurban markets around the country. These are areas that are typically very underserved, by healthcare facilities. And typically, or in a lot of ways, that the way that LifePoint enters a community is there's an existing hospital that's failing, that's going out of business, poorly managed, and LifePoint comes in, takes over operations, and does two things. First of all, make sure that that hospital doesn't go away. And in some areas, that could be the difference between life or death. If people have to drive, 3 hours to get to emergency room, that could be a horrible thing. But also the company is very focused and has built out this massive set of best practices and operational procedures with Duke University School of Medicine. Because as you can also imagine, a single stranded hospital in the middle of nowhere that's failing financially typically isn't run very well. And who suffers when that happens? The patients do. And so by coming in and day one implementing, this rigorous set of procedures, we see patient outcomes drastically improve when, LifePoint comes into an area. And so, it's seeing that scale, the number of kind of unsung stories that are coming out of those hospitals remaining and improving their care and growing and investing in themselves, I think is very true to kind of our, where we're helping out is in this concept of, these large scale acquisitions with an impact focus on them.
Justin, a question, and I'll ask you to keep the answers relatively short, just so we can get some more comments also from Sandy and Bart as well. But what's your perspective on blockchain and decentralized finance, which I think is an interesting one to put into a 30-second answer, basically, in impact, because is there a way that that we're going to be using blockchain in impact investing, essentially? Like how do you put those two together?
I was going to say we probably need another 3 hours for that one. I'd say the biggest thing I could say is that blockchain at this point is way too large of a world to kind of break down into one word, right? I think there's developed market speculation in Bitcoin and other coins, which I think is one topic, which to me is actually less intellectually interesting than, the ability for emerging markets, which don't have strong sovereign, fiat currencies, being able to control their own destiny through controlled, organized, crypto, currencies. There's the ability for blockchain to verify supply chains, which I'm sure is something Bart's very focused on, and how that can be useful and helpful. Going back to the creative economy, there's ways that NFTs can be used to kind of create that direct linkage between the artist and the fan. So to say that all blockchain has no future is foolish. To say that all of blockchain is great, in my opinion, is equally as foolish. But I think there's pockets that are incredibly interesting. And I don't know who the winners and losers are yet, but this is going to be like saying, what's your view on, on air, right? Like there's so much to kind of talk about.
30 seconds left, Justin. Bart, comment on blockchain in this industry, or too early and too complex to comment on right now?
It took a catastrophe like COVID to start killing the check in the American financial system, which to my horror, all my friends in the US still use to pay rent or pay a utility bill or this and that. I have news for you. Whether it's going to be blockchain or something, I don't know. But people in Nigeria 5 years from now will buy their healthcare on their mobile phone.
Sandy?
Not a word to add.
Yeah. Another question, what types of companies or sectors make for the best investments in terms of potential impact and potential financial return?
Eye of the beholder. I mean, I really think so. I think you'll speak to.
Sorry, Justin, I spoken over you, and I just want to make sure that people heard what you said. Say it again, please.
Yeah, I say that's in the eye of the beholder. I mean, I have friends who have been in climate investing for years, and in their view, climate's the thing that matters. I have friends in social investing, and that is their focus. I think the beauty of this is we can all have the discussion, and people can, chase what's important to that.
Right, and what I would add to that is being very crystal clear on the outcome that you're seeking. That's the most important thing, so that this industry continues to flourish, because we see the results, we see the wins, and in the eye of the beholder, pick your passion and go at it. Just bring your money.
Bart?
Not much to add, I think.
I do have a question though for you, Bart. I'll direct it at you, because Cecilia writes in and says, I think there's a major challenge of financial inclusion of the very rural marginalized communities in Africa. What are your thoughts on this?
I mean, it's probably from a human well-being perspective across the world, if you look at it globally, it is probably the most challenging, the biggest challenge we face. There's no question that bringing very simple, very basic financial intermediation to women in Africa, and I'm mentioning Africa, but you go through other emerging markets as well, is probably solving that problem is probably most impactful on a global scale.
Elise says, thank you, this has been great. Great speakers, very kind, Elise, thank you. We much appreciate it. Let me just come back to a couple of the, I'm not sure how much time we have left, but I'm sure that somebody will know. But how do you make the impact more organic? Is this a generational thing also, that where we somehow need to rethink how it filters through from leadership of companies, so it becomes kind of a second nature to do impact investing?
Wow, that is a big question. The easy answer is yes. There is much work to do to filter through the notion of impact investing as just a real business initiative, a business outcome. And that has to start at the top. But I do believe that in many instances, it's being pushed upward from the bottom. So it has to be what I call a listening organization that listens from the bottom up and the top down. But at the end of the day, the leader, push, pull, drug, however you get there, has to be willing to step front and center and say, this is a set of guiding principles that we want this company driven by.
Okay.
My view,
We're out of time. We're 2 minutes over now, actually. So thank you so much to everybody. Thank you for everybody who wrote in with questions and comments. Make sure to tune in tomorrow. There's much more to come at this Social Innovation Summit 2021. Sandy, Justin, Bart, thank you so much. And I hope to see you all again. Thanks a lot.
And a pleasure.
Thank you very much, Louisa. Thank you, Sandy and Justin. Ciao.
Yeah.
Bye-bye.